a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A risk management cut. Stock futures and the dollar gaining today following a Fed cut, with Chair Powell staying cautious on the rate path. Down to business. President Trump set for tough talks on trade and politics with UK Prime Minister Starmer. And China reportedly dropping its antitrust probe into Google's Android during trade talks with the United States. But as I said, it's all about the Fed today. We got that first cut of what could be 3 cuts this year, according to the dot plot. The cutting cycle has started, and it looks like futures are powering ahead after treading water for the most part for equity indices yesterday. We actually ended fractionally lower for the S&P and the Nasdaq 100. But again, a front loading of cuts has the dollar stronger. And let's look at yields, because of course there were several cuts priced into the bond market. It looks like we're just down a couple of basis points pretty much across the curve. Down a little more at the longer end, the 10-year at 405.46, the 30-year yield sticking to that 465.34 mark. And Bitcoin, along with other risk assets, powering higher above 117,000 as well today. Also noteworthy, gold off, but just by a little bit. So before we get into more of all of that, let's get to some individual stocks to watch. Over to London now, and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with any Google reaction to China dropping that antitrust probe. We are seeing a positive reaction when it comes to their share price. Alphabet up 1.5%. This is on the back of that FT report that you mentioned, that China is dropping a antitrust lawsuit that it brought back in February, having mostly to do with the dominance of Google's Android operating system. Now, one could argue perhaps they're changing their attention from Google on to the chip giant NVIDIA, who's been a recent proponent of many attacks by the Chinese regulators. Moving on to more of a Google story, shall I say, having to do with PayPal. They've announced a multi-year partnership, and PayPal is up another 2.5% nearly. It rose yesterday in late session trade as well. And now this is a part of Google integrating PayPal into more of its new tools, one of those being agentic shopping, which, Vonnie, is when a chatbot does your shopping for you. I'm very interested to see when that launches. Lastly, let's move on to Cracker Barrel. This is an earnings story. They gave weak guidance and showing that sales, at least for the next few quarters, could be stagnating. Now, this is on the back of quite a large online backlash to its logo rebranding. It tried to streamline its logo, and that even attracted the attention of the U.S. president. They have since then reverted the logo back to its original state and ended the rebranding and remodeling of its stores. But it seems to be weighing on earnings, with Cracker Barrel down nearly 10% in pre-market trade. Bonnie?
Branding a real challenge for so many companies these days. Valerie, thank you so much. That's Valerie Teitel. And a great lineup for you this morning. Peter Oppenheimer of Goldman Sachs joins on this stock market rally. Plus, we'll discuss what to expect from President Trump's UK visit with Marjorie Chorlins of the US Chamber of Commerce. Back to the Fed, though, the first rate cut of the year.
I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market.
For more, I'm joined now by Bloomberg cross-asset strategist Ven Ram. So Ven, Powell calling it there a risk management cut, yet he was very definite that, it was time to cut, and there was only one dissent on the committee. What does he mean by a risk management cut?
Well, it's a bit of a conundrum what they mean by that, Vonnie, because if you, as he mentioned in the speech that you just played, I mean, if you look at the dot plot, they're thinking that the unemployment rate is going to tick down over the next couple of years. They're thinking that inflation is going to accelerate, and they also think that the GDP growth is going to accelerate. So for them to be cutting rates against that scenario only means that, they want to ensure a soft landing of the economy, and that is what is spurring them to cut rates. And they have penciled in. Even so, what is important to note here is that they made the markets only halfway. The markets are thinking 6 rate cuts, including yesterday's, between yesterday and the end of next year. But the Fed is saying 3 rate cuts. So I think that the markets have been set up for some hawkish disappointment, and that is what you are seeing through in the markets, reverberating through into the 2-year yield, as well as the dollar coming back.
Yeah, and while there was only one dissent, there is a lot of dispersion with the dots. So 7 dots signalling no further cuts this year, 9 signalling 2 or maybe fewer, and 1 sees an actual hike. Will we get more clarity on what the committee thinks as a whole, you know, maybe from the minutes or from Fed Speak next week?
Well, I think that the next real clarity will come in March, Vonnie, because we'll get another set of dot plot in December, but then we've got to keep in mind that in February, there's going to be a rotation of governors, and that's when, so the March will be the earliest when we get the next set of dot plot, which includes all the new members and the new governors, and I think that that's when we will get actual clarity on where the terminal rate may be.
All right, Ben, thank you so much. It's a long time to wait. Ben Ram there joining us. Across the Atlantic, President Trump's state visit to the UK shifts from pageantry to politics today. Despite some rain and protests, yesterday's meeting with Britain's royal family appeared to go well for both sides.
Our countries have the closest defence, security and intelligence relationship ever known.
His Majesty spoke eloquently about the bond which inspired Sir Winston Churchill, and the bust is in the Oval Office right now, the beautiful bust of Winston Churchill, to coin the phrase special relationship.
Tyranny once again threatens Europe. We and our allies stand together in support of Ukraine.
Bloomberg's chief UK correspondent Lizzie Burden joins us now from Windsor. Lizzie, first, give us the highlights from last night's state banquet and, of course, the King's speech.
I'm not sure I've ever seen Donald Trump so delighted, Vonnie, but look, around that table it wasn't just the President and the First Lady, the King and Queen as well. It was also some of the biggest names of Silicon Valley and Wall Street, the likes of Jane Fraser of Citigroup, Nvidia's Jensen Huang, Blackstone's Steve Schwarzman as well. And they were dining on this Norfolk organic chicken, a transatlantic whiskey sour to wash it down, a specially made cocktail. But of course the hope is that having been wined and dined, that will translate into investment from these names. Now, notably absent from the state banquet, of course, was a UK ambassador to Washington, Peter Mandelson, of course, having been fired over Jeffrey Epstein and his links to the late financier, the sex offender. That will linger over the press conference later on today, perhaps. And certain names have been floated for who could replace him, the likes of Karen Pierce, reportedly someone that Donald Trump would be open to, but British officials nervous that bringing her back into the fold could underscore the mistake of hiring Mandelson for the role. But look, the King, you heard there, emphasising the importance of defending both Ukraine and the environment. And it was interesting to see him hitting on these fault lines between the UK and the US when this dinner was meant to curry favour with the President. But as I say, the President nodding along, clearly enjoying himself, the President being told we are kin by the King, and the King, perhaps you could say, stepping out of the tradition of the monarch and speaking his mind somewhat in that speech.
So that was the diplomacy effort, Lizzie. It's on to politics today. And what are the priorities on both sides?
Yeah, from pageantry to business and politics. When it comes to business, we're of course expecting these tens of billions of pounds worth of economic deals. £105 billion is the figure being circulated from Keir Starmer's team when it comes to the overall investment in the UK. A record, they say, and that will create 7,600 jobs here, the lion's share of that coming from Blackstone. And really it's a crucial time for the UK, given the need for growth, given that that is Starmer's priority. What I don't expect to hear much about is the Middle East, because Starmer, reportedly from the Times of London, expected this weekend to recognise Palestine as a state before the UN General Assembly in New York next week, but saving that so as not to create a diplomatic disaster at the presser today.
All right, Lizzie, thank you so much. That is Lizzie Burden in Windsor. Back in Washington, congressional Democrats are demanding Republicans agree to healthcare policy changes in a standoff that threatens the funding for government. For more, Bloomberg's Suzanne Lynch joins. So, Suzanne, what exactly are the Democrats hoping to achieve? Do they have much power here?
Yes, this is an interesting move by the Democrats. They are seizing on the healthcare provisions that were or were not part of that big, beautiful bill. And they see, I think, a political opportunity here to connect with voters ahead of the midterms next year. They are asking that some of the Obamacare tax credits that are due to expire should be extended in some way. Now, that is going to cost, tens of billions of dollars here. So big questions about the cost on that. Republicans have said, the Republican leadership has said that is not an option at this moment. But Chuck Schumer and a lot of senior Democrats are pushing for this. And they are hoping that they will be included in some kind of stopgap bill that is being put forward to avoid a government shutdown.
All right, Suzanne, thank you so much for that. That's Suzanne Lynch. Now to other top stories trending on the terminal this morning. Disney's ABC network has decided to take Jimmy Kimmel's late-night show off air indefinitely. This comes after a backlash over his recent comments regarding the killing of Republican activist Charlie Kirk. In his monologue on Monday's show, Kimmel accused the, quote, MAGA gang of using Kirk's death to criticize their opponents. Huawei unveils new AI chip technology. The new technology has greater computing power to challenge NVIDIA's dominance. This marks the latest development by Chinese firms trying to develop their own homegrown alternatives and lessen the impact of US sanctions. D.E. Shaw is raising money for a new hedge fund where, for the first time, the firm will ditch the algorithms and let human traders call the shots. A representative for D.E. Shaw declined to comment. Coming up, the spread between stock winners and losers widening across the board. That's according to Goldman's Peter Oppenheimer. He joins next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Goldman Sachs says the equity market has entered a postmodern cycle, writing the following. Valuations and margins are already elevated and interest rates have little room to fall. So absolute returns are likely to be lower, yet this environment is fertile ground for alpha generation as the spread between winners and losers widens across and within sectors and factors. Goldman's Peter Oppenheimer joins us now, his chief global equity strategist. Peter, thank you so much for joining. First of all, I have to ask you this 25 basis point cut and the manner in which it was delivered. So, guidance for 2 more cuts this year from the dots, but also plenty of differing opinions in the dots. Does it change your base case at all?
Thanks, Bonnie, for having me. No, it doesn't. I mean, it's consistent with what we're in. I think the market was expecting. We're looking at another 2 rate cuts this year. And another 2 next year, getting down to around 3 to 3.25%. The direction, I think, is clear. It reflects, of course, a moderating economic growth environment, but one that's still positive. And we should say, actually, that combination of falling US interest rates with positive growth does tend to be pretty supportive for risk assets. And that's the sort of broad setup that we expect to continue to really define the next quarter or so.
And we're certainly seeing that in the market this morning. If margins have been squeezed by higher inflation, and we saw that in the last earnings cycle, does this 25 basis point cut help at all, and when might it help?
Well, certainly lower interest rates are going to help, and I think are an important part of the policy adjustment in a period of lower growth. We should say, of course, that longer-term interest rates are not coming down as much. Of course, that's true globally. So the cost of capital is not falling as much as we might have seen in other periods where policy rates are being cut. And you're right to identify, I think, margins as being a crucial focus, really, for investors, given that they are record highs. And there is some risk, of course, that they don't continue to rise at the same rate or even come down a bit. And that's why I think stock selection, alpha selection, really looking at idiosyncratic risk is becoming more important when you think that those high margins are also combined with record or close to record high valuations for the index, at least as a whole.
And then just one more on the Fed mandate, Peter. the labour market. Obviously, we've been seeing companies maybe reluctant to fire, but certainly not running out there and hiring. Do you anticipate that companies will be able to keep everyone they have on their payrolls, or will we see, an increase in the pace of laying offs? What about wages?
Well, the labour market has been a very important driver of economic growth, not just in the US, but actually across many countries over recent years, even in the period where interest rates were rising after the pandemic. So any weakness in the labour market from a low level should be something to be watching very closely. And I think that plays in a little bit to the Fed's decisions. We know that rising unemployment from a trough has in the past been an important barometer of weaker growth or even recessionary risk. So I think it's a really important thing to watch for. But, there's, of course, likely to be some effect from AI, for example, on the labour market and on hiring decisions. But, of course, a lot of growth opportunities as well. And so while we do expect unemployment to be rising moderately, we don't see this to be a significant trend or something that's likely to destabilise the economic cycle more broadly.
And indeed, the Fed did say that AI might be having an impact on demand, as well as, of course, of immigration on supply. You say AI trade's potential is now dependent on upgrading infrastructure, creating opportunities in digital as well as physical assets. So if we take that as a given, where do we look for the winners and avoid the losers?
Well, I think on the AI story, the really interesting thing is twofold. First of all, we are seeing the dominant tech companies, which have reached sort of record high share of at least the S&P for good reason, because of staggering profit growth. They are transitioning to being really quite capital heavy, and they've ramped up their capex spending plans even again for next year to around $460 billion or so, a huge amount of money. The question will be, what kind of return will they get on that incremental capex? But also, I think, interestingly, we're now seeing a bit of a symbiotic relationship between the aspirations of these leading tech companies and indeed other parts of the economy, because the tech giants are increasingly dependent on a revamping, an upscaling of physical infrastructure, particularly in things like electricity generation and distribution. And that's one of the ways in which I think you could get a parallel opportunity, not only for technology innovation and its effect on technology in other companies, but also in some of the more mature, developed industries which have been long neglected, underinvested, where we're going to see quite a big impact of this rise in capex over time. And that creates a more even distribution of opportunities, I think, for investors in an environment where diversification is becoming more important.
On that, on diversification, you also say geographic diversification is important. Obviously, we've seen a huge move up for China and some other countries. Is that move done now? Is China less investable than it was a few weeks ago? Is it still uninvestable, maybe?
No, I think this diversification trend is going to continue across geographies, even across factors and sectors. But, let's think about it. We had nearly 15 years of staggering outperformance of the US market relative to all other markets for very good reason. It was generating much stronger profit growth, largely driven, not exclusively, but largely driven by its tech sector. But actually, if you think about it year to date, in local currency terms, all major regions have generated pretty similar returns. S&P up roughly 12%, similar to Europe, similar to Japan, China, and so on. That's been a long time since we've seen such even distribution geographically. And of course, because the dollar has been weakening, you've seen better returns outside of the US for a dollar investor. Europe up around 25%, parts of EM more than that. Germany up 35%. Countries like Italy up 50% in dollar terms, driven largely by banks. So we're starting to get the benefits of geographical diversification coming through. Similarly, across factors, yes, technology is doing well and we like it, but we're also seeing some very good improvements in value plays in markets as well.
Peter, we have to leave it there already. Thank you so much for joining us this morning. Peter Oppenheimer of Goldman Sachs. Coming up, China drops a major probe into Google, and a look at what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Financial Times reports that China is dropping an antitrust probe into Google. The move comes as Beijing and Washington step up trade negotiations. The investigation focuses on the dominance of its Android operating system and its impact on Chinese phone makers. Next up, the Wall Street Journal reporting several executives at XAI left after clashing with two of Elon Musk's closest advisors. According to sources, the executives left over concern about the startup's management and financial health. The executive conflicts inside XAI showcase how Musk's unorthodox approach to running companies is complicating his ambitions to build the world's dominant AI company. And on the New York Times, the chair of the Senate Health Committee, Senator Bill Cassidy, raising questions on the trustworthiness of a federal advisory panel on vaccines. Major insurers said they would continue to cover on routine shots, even if the panel tried to limit their use. The panel is set to meet today and Friday to review recommendations for 3 childhood vaccines. Coming up, a Trump-Starmer bilateral meeting on deck in the next hour. We'll catch up with Marjorie Chorlins of the U.S. Chamber of Commerce next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A risk management cut. Stock futures and the dollar gain following a Fed cut, with Chair Powell staying cautious on the rate path. Down to business. President Trump is set for tough talks on trade and politics with UK Prime Minister Keir Starmer. And China reportedly dropping its antitrust probe into Google's Android during trade talks with the US. So let's take a look at how markets are faring now, just a few hours after that first cut this cutting cycle. As we said, the Fed chair did call it a risk management cut, but also signaling more easing coming. 2 more cuts indicated in the dot plot this year. That has futures higher than we've seen them in several days. Also bonds higher as well. The dollar index stronger today once again. We have the yen also below 147. Take a look at yields, because we're down 3 on the 2-year yield, 352.17, down 4 on the 10-year yield, and the same for the 30-year yield. Below 465 now. Those cuts were pretty much baked in, but just a little extra shaving of a move, if you like, there. The dot plot, of course, remaining a little bit divided about what to do next. 7 dots signaling no further cuts this year, but 9 expect 2 or fewer, and 1 even sees a hike. So lots to dissect. Let's get to some individual stocks to watch now with Valerie Teitel in London. Valerie.
Good morning, Vonnie. Let's start with IonQ, because they've signed an agreement with the Department of Defense to use quantum computing when it's relation to space technology. We're seeing shares of IonQ up nearly 6%. Now, this quantum computing technology will be used firstly to have quantum safe satellite communications. But the Department of Defense is hoping to team up with IonQ in order to push quantum technology into more space things, kind of like defense, mapping and sensors and navigation, things like that. So we're looking pretty positive when it comes to IonQ stock, up nearly 6%. Now, staying in the defense space, this one is a bit of a long story. Let me explain it. Red Cat, they're a drone stock. They're offering more shares in a public offering. Now, the details are scant when it comes to the size and the timing, but Red Cat is hoping to use this extra cash in order for CapEx spending when it comes to unmanned surface vessels, which essentially is a fancy word for a drone warship. So keep an eye on Red Cat. The stock is down 9%. Lastly, let's end on earnings. Cracker Barrel gave a disappointing guidance and disappointing earnings for the previous quarter. That stock is down nearly 10%. They are dealing with the fallout from a rampant online backlash to streamlining their logo that even attracted the attention of the U.S. president. Now, Vonnie, they have since revamped their logo back to the original state and have stopped the revamp of its stores as well, but they are still suffering from sales declines off the back of that.
Well, we'll see if those lost sales return, I guess, next quarter. Valerie, thank you so much. Valerie Teitel there. After pomp, ceremony and protests, President Trump's state visit to the UK will shift to politics today. Trump and King Charles both spoke at last night's banquet in Windsor Castle.
Our countries have the closest defence, security and intelligence relationship ever known.
His Majesty spoke eloquently about the bond which inspired Sir Winston Churchill, and the bust is in the Oval Office right now, the beautiful bust of Winston Churchill, to coin the phrase special relationship.
Tyranny once again threatens Europe. We and our allies stand together in support of Ukraine.
For more, Bloomberg's chief UK correspondent Lizzie Burden is back with us now from Windsor. Lizzie, how's it gone so far? What are you watching for today?
Well, it's fair to say, Vonnie, this has been a success so far. The president saying it's one of the highest honours of his life to be invited for a second state visit. You could see how much he was enjoying himself last night. But as you say, today it turns from pageantry and pomp to business and politics, and the journey from Windsor Castle after last night's sleepover to Chequers, the Prime Minister's country estate, beginning shortly. The expectation is that we'll have the biggest names of Wall Street and Silicon Valley having been wined and dined last night, announcing more of these deals. So $205 billion is the expected total of investment to be announced in the UK. It would be a record, creating 7,600 jobs at a time when UK growth really, really needs it. And we had as well the King last night urging Trump to defend both Ukraine and the environment, so hitting on the fault lines between the two countries at the moment. Starmer expected to pick up the mantle on that. But what we're not expecting is a push when it comes to the Middle East. Starmer, the Times of London, reporting that we'll save it till the weekend to recognise Palestine as a state. But that issue could still dominate the press conference later, as well as questions about Jeffrey Epstein.
All right, Lizzie, thank you so much. That is Lizzie Burden in Windsor. President Trump wrapping up his state visit to the UK then today. And while the US and the UK signed an economic prosperity deal back in May, the US Chamber of Commerce says that it, quote, remains fundamentally incomplete and unbalanced in terms of key pro-growth priorities. Joining us now is Marjorie Chorlins, Senior Vice President for Europe at the US Chamber of Commerce. Marjorie, we heard Lizzie there name some of the things that the UK is going to get in this particular visit, the promises the UK is going to get, including the creation of upwards of 7,600 jobs. What does the US get in return?
Thanks very much, Bonnie, for the opportunity. It's an important opportunity for the U.S. and the U.K. to grow and deepen our commercial relationship. You mentioned some of the things that the U.K. may get out of the deal. From the U.S. perspective, American businesses are always interested in deepening and broadening our relationship with the U.K. Obviously, one of our most significant trading partners. The U.S. is the U.K.'s largest investor, a $2 trillion relationship, indeed dominated by investment. So I think there are ample opportunities to build on the framework that is the U.S.-UK economic prosperity deal.
What do you imagine will happen with tariffs? So, for example, it seemed like Britain was willing to eliminate the digital services tariff or digital services tax. But has the US asked for that, or what will happen with that?
The American business community is very interested in seeing the elimination of the digital services tax, not only in the UK, but in other countries that have already adopted the tax or are considering adopting the tax. It is this kind of measure that unfortunately throws into question where companies would like to invest their money. And so we are in favor of eliminating the digital services tax, as well as other tariff and non-tariff trade barriers on both sides of the Atlantic that inhibit that growth in the relationship.
Well, speaking of tariffs, the baseline tariff on UK goods is still in effect. Is there, any impact on US businesses from that tariff being in effect?
The Chamber's position on tariffs is, of course, we would prefer to see low or no tariffs on trade with our largest trading partners, frankly. And so the fact that we still have a 10% tariff as a baseline tariff with the UK is, yes, it's better than it had been initially, but it is nonetheless higher than it would have been in the absence of these new tariffs. So from the business community's perspective, again, as with taxes, tariffs are indeed taxes, and this is the kind of thing that inhibits the free flow of commerce and investment between countries. And so we would like to see the reduction or elimination of tariffs on both sides.
Well, and of course, Marjorie, you know, we saw in those pictures at that state banquet last night, Jensen Huang, Sam Altman, Steve Schwarzman, plenty of, you know, leaders and moguls representing mega businesses. You didn't see anybody representing small businesses. What are you hearing from the thousands and thousands of small businesses that, you know, want to import from the UK or export to the UK?
What we're hearing from small businesses is that the tariffs are impacting them to varying degrees, but impacting them nonetheless. They're also impacting large companies. It's not just small and medium-sized companies, but that is indeed with the SMEs where you see really significant hits. Some companies have been forced to close, others have been forced to shift their business model to accommodate the higher tariffs, and so it does have an impact. Especially with companies who are engaged in perhaps complex supply chains where they need to import certain things in order to be able to provide their own inputs into other manufacturing.
Still in question are the steel and aluminum tariffs and also these Section 232 investigations. What's the Chamber's position on those when it comes to the United Kingdom in particular?
Well, indeed, as I indicated, from our perspective, tariffs are generally a tax that don't effectively support the free flow of commerce. So in terms of the tariffs on the anticipated tariffs on pharmaceuticals and the continuing tariffs on steel and aluminum, again, these are tariffs that we would like to see come down because the adverse impacts in particular of the steel and aluminum tariffs when it comes to manufacturing is very significant.
Marjorie, beyond the United Kingdom, what countries are most, you know, have the most to lose, let's say, when it comes to US businesses in this round of negotiations? Because, of course, these tariffs, we still don't know where they'll end up, and there's so many negotiations ongoing.
There are negotiations ongoing, and honestly, my patch is Europe, so I can speak to Europe specifically rather than the other countries that you might be interested in. In the case of Europe, again, we have the framework of a possible agreement. Obviously, ample negotiations still have to continue in order to flesh out the deal. And frankly, it's something we hope will happen sooner rather than later. I mentioned not just tariffs, but also non-tariff trade barriers. And frankly, that is a significant concern when it comes to Europe in terms of the regulatory overreach that we see across many sectors.
Marjorie, thank you so much for joining us this morning. That is Marjorie Chorlins of the US Chamber of Commerce. Coming up, the US government faces its latest shutdown risk. More next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. We are looking at potentially an everything rally today. Even gold has started to rally, just putting on at about $10. But this, of course, after the rate cutting cycle started. We now have a 25 basis point rate cut in the books, with the dot signaling 2 more this year. A wide dispersion, of course, on the FOMC committee about what should happen, but that at least is the median projection and the forward guidance. S&P futures, as you can see, among indices that are pointed higher in the early market. The Nasdaq as well, also seeing gains to the tune of 1%. We have the dollar just turning a little bit lower now, but it was higher, and definitely you have the dollar stronger against the yen, the euro and sterling today. And the 10-year yield also rallying, with the yield down 4 basis points. So the 10-year Treasury rallying across the board there for fixed income. In Washington, Democrats in Congress demanding Republicans to agree to changes to healthcare policy, an impasse in the standoff that threatens funding for government, ratcheting up the risk of an October 1st shutdown. For more, Bloomberg's Suzanne Lynch joins us now. So, Suzanne, what exactly are Democrats hoping to achieve? Do they have much power in this over and back?
Yeah, there are a couple of elements to this. Democrats want to reverse some of the Medicaid cuts that were enacted back in July as part of this big, beautiful bill, and also extend Obamacare tax credits that are due to expire. So very much focusing on healthcare. They want these provisions in a stopgap funding bill. The government shutdown could be as close as October 1st. Now, Republican leadership has said, to quote the House Speaker, there is zero chance of this. But we do see some Republicans making noises that they could be open to some discussions on this. Healthcare is obviously a big political issue. It's a big issue for voters in some of those swing districts for Republican lawmakers ahead of the midterms. So it is facing and setting up to be quite a confrontation over this over the next few days.
Suzanne, thank you. We will be keeping our eyes peeled. That's much appreciated. That's Suzanne Lynch there. Turning to tech, the Financial Times has reported that China has ended an antitrust investigation into Google's Android, just as Beijing and Washington are engaged in trade talks. Let's bring in Tom McKenzie now for more. So, Tom, Huawei is unveiling a new AI chip technology to challenge NVIDIA as well. We want to get to that story. But first, give us the details about this China relationship and what exactly is on the table.
Well, politics is clearly never far away when we're thinking about some of these decisions, because the decision to launch the antitrust probe versus Google and its Android product in the Chinese market was initiated shortly after tariffs were put in place on China. Now it's been removed just before this conversation that we're expecting between the two presidents of Trump, of course, and Xi Jinping tomorrow, and as those trade negotiations continue. So there is that political overlay to all of this. Look, Google, the search engine, is essentially blocked in China. It has a minimal advertising business for Chinese companies who want to advertise beyond China's shores. And so that is something that will be factored in amongst executives at Alphabet and Google. But really, this is not very much for China to lose, but to give a sweetener to the US. It also, as those conversations and those negotiations continue on trade, but it also allows China really to focus the regulatory spotlight on NVIDIA. And you've seen that. They have made a call. They've told companies like Alibaba to stop buying some of NVIDIA's chips that are being and can be repurposed for AI uses. That call came through from Chinese regulators. They've also, of course, launched an antitrust probe into NVIDIA itself over a deal that it made a number of years ago to buy a networking business. And separate to that, the Chinese authorities are also launching a probe into an anti-dumping probe into companies like Texas Instruments, or at least chips made by companies like Texas Instruments. So really, the lens is on chips, and they're able to end this antitrust probe into Google and give a sweetener to the US as they continue those talks. But they're not letting up in terms of the investigation and the focus on chip technology.
And this Huawei chip that I mentioned, Tom, can it compete with NVIDIA?
Not yet, but they're catching up. And Huawei really is the big bet for China when it comes to closing the gap on chip technology. And there's pretty significant announcements coming through today. This is really the first time that Huawei has lifted the lid on its current but also longer term plans. They came through with updates to some of their AI accelerators and mapped out a plan for new AI accelerators to build on that, new versions of them, all the way through to 2028. The AI accelerator made by Huawei is called Ascend, but they also came up with high bandwidth memory that will accompany those AI accelerators, and also networking systems, allowing them to network more than 15,000 of these chips in a single cluster so they can be operated as one. So some significant updates from Huawei, which is closing the gap on US technology. Not there yet, but this is a reminder that China, in terms of its internal processes and focusing on that resilience domestically on the chip space, they have made some progress.
Only a matter of time, I guess. Tom, thank you so much. That is Bloomberg Tech Europe host Tom McKenzie. In a Bloomberg scoop, Tesla redesigning its door handles after scrutiny over safety incidents that trapped passengers inside their vehicles. Tesla chief designer Franz von Holzhausen spoke exclusively to Bloomberg's Matt Miller and Hannah Elliott.
We actually have a mechanical release that's, basically right at the electronic one too, and we're combining the two. So, in the moment that you're in a panic situation, the muscle memory to go to, what is right there. So you just pull a little bit further on the lever and you have the mechanical release. So that's something that we're working on, yeah. And it's in the cars now.
All right, so if there is then a China ban, you're ready to roll that out so that
we're working
well,
on
actually the ban I guess the Chinese issue is the flat outer door handle. So would you do something? Would you make a change like, you know, Ferraris have that little crease you can reach into? Is there some idea about that on the outside?
Yeah, we're working on it right now and just looking at the details of the regulation, if and when that happens, and we'll have a really good solution for that. I'm not worried about that.
It makes sense. You know, I know like it's one thing for us adults to know that, but for kids, you know, it's a little bit different to expect a kid to know how to go for a manual release.
Yeah, so the idea of combining the electronic one and the manual one together into one button, I think, makes a lot of sense. It really helps to, the muscle memory of reaching for something every day is there. And so you intuitively just grab the same thing and you're free.
That was Tesla's chief designer, Franz von Holzhausen. Joining us now for more on the story is Bloomberg's Katrina Nichols. Katrina, so what is the latest on this particular redesign?
Yeah, well, as we heard, Tesla's chief designer there, and he's been with the company for about 17 years, saying that Tesla is going to combine the electronic and the manual door release, which currently are located in different parts of the car, into the one button. So, if you were in a situation where you needed to unlock that door quickly from within, you would press and then keep pressing, and it would actually trigger the manual release. And this sort of admission from Tesla comes after the company is being investigated by US safety authorities over there. Some 174,000 Tesla Model Ys from 2021 are potentially being looked at because of this issue with the door not being able to easily open. This is particularly problematic if the car loses battery power, and so then you actually can't manually release that door. But then also, if that were to happen and the electronic door release rather isn't working, to find that manual release in Tesla cars can often be quite difficult. That button is in some models not marked very clearly. It can also be in different locations in the car. It can be sort of in the armrest, particularly in the back seat of the Tesla. It can be even under the floor mat or sort of down beside a door. So if you're not familiar with this car, and particularly if you're a child riding in the back seat, it would be very difficult to open these doors from within. So that's something that Tesla is being investigated about, and it's something that the company, as we heard just then, themselves are trying to address.
Katrina, thank you so much. That is Bloomberg's Katrina Nicholas. And tune in to the newest Hot Pursuits episode with Ford CEO Jim Farley. That's tomorrow, anywhere you get your podcasts. Coming up here on Bloomberg Brief, more on rate decisions and more data on deck in your day ahead. Next, this is Bloomberg. Now look at what's ahead today, and in particular this moment we have the President Donald Trump, arriving at Chequers, of course the country house of the UK Prime Minister. So there will be lots of political discussion over the next few hours in a press conference due a little later on today. This of course having left Windsor Castle. Once again, you're looking at live pictures of President Trump arriving at Chequers, the country house of the UK Prime Minister, in this case Keir Starmer. We will be awaiting any details that come out of those discussions. Do stay tuned to Bloomberg TV, which will be following all of the minute details. Well, that's it for Bloomberg Brief. Surveillance is ahead. This is Bloomberg.